Welcome everybody. How we doing? Hope everybody had a good weekend.
What
What's
up,
up,
River?
What's up, River? What's up?
What's happening? How we doing, guys?
Pleasant surprise to see you on the Sunday night scam.
Yeah, 1K finally taking a week off, man. That guy hasn't missed a day in forever. He's well deserved. Well deserved. Happy for him. Plus, it's good for me to do a Sunday night scan. I pretty much turn off the charts at 1 o'clock my time Friday, and I mean I'll glance at futures on Sunday, but I don't even look at them really till Monday morning. So it's always good for me to do the Sunday night scan and actually see where the market's at too before I start trading. Welcome everybody. We'll give it a few more minutes here.
Trying to decide what I want to take a look at this week, Bank of America or SoFi. Hmm.
Got SoFi on the list tonight. We're gonna check it out.
Oh, cool, for sure.
Yeah, yeah. I like SoFi. Few names setting up real nice here. But this SoFi one, they're focusing on it right now. I mean, nothing I want to be long in here. Obviously, you're still long, great spot, but yeah, we'll touch on that one too. But starting to spy QQQ.
I actually use them like as one of my banks, and my IRA is actually with them too. So I have
Nice.
shares. I have to support them with shares if I'm going to use their product.
Yep, that's good. I like that. I like that. That's why I own this company, man. I actually I like what this company does, and they got an insane amount of upside, and so uh, that's why I own this one. I like them.
Yeah, I started out with 200 shares at like $7, and then I sold half of them when it was at like 16. So now I'm sitting at 100, and I'm just not selling them.
Yeah. My one issue with SoFi is they're just always battling that debt stuff, but banks can just keep on going.
As far as somebody who uses them, the one of my main gripes is there's no physical branches. If you want to take money out of the ATM, you got to go to like one of their all point ATMs, and
Yeah,
they got them all on their map. And it's not, they don't charge you a fee or anything, but it's like I got to go to the gas station here on the corner and use it to get cash out.
yeah,
So,
but
but it's all
yeah,
right.
they're that's because those tech folks, man, they just much prefer cash gone. Like, they aren't out there advertising to the cash consumer.
Do they also limit the amount you could take out?
No, they don't. Or I don't know. Actually, I've only taken out, a few hundred here and there. I don't be getting crazy. But what something else that kind of blows is if you want to put cash in, you have to go to one of their partnered retailers, and those places like CVS or something will charge you $5 to deposit your cash into your bank. So I have a One Nevada Credit Union account for that reason. That way I can just transfer money back and forth. I don't gotta mess with that. But other than that, I like their platform. I mean, it's smooth and simple. They give you a lot of different perks and stuff for having direct deposit and things like that.
PR is massive too. I mean, that's 4% or whatever that'll keep people coming to you.
Yeah, they since had to lower it though. I think it went down to 3.9% on your savings, and then like 1.2 on your checking.
Yeah,
But
versus the 0.03 that like Wells Fargo or Bank of America gives you, you're coming out like a bandit.
They've also been running this promotion. I don't know how long it's going to go, but they'll match you. They'll give you an additional 1% for every time you add money to your Roth IRA. They throw you 1% on top of whatever you put in, which
Wow.
doesn't sound like a lot, but if you're putting on a lot of money, I guess it can add up.
Yeah. Oh yeah. 1%'s nice. Okay, let me get this posted. Go look at a couple other things. There we go. Really. I almost bought some shares on it right before close, just figured it pop right away. Second.
Man, I'm kicking myself for not buying more shares of Hood when it was at 30. I picked up some around $30 and never added more. Just been riding it.
I don't think
But
that's bad.
that's okay though. Green is green, huh?
Yeah. Yeah, that's good. That's good. Okay, welcome everybody. Happy to have you here, Dirty River. As I was saying earlier, if you were here, covering for 1K tonight, taking a much deserved week off, hiking in the hills. Hope he's having a really good time. So I'm covering Sunday Night Scan tonight. So tonight we're going to be, I got my eyes on a couple of things. We're obviously going to start with SPY and QQQ. And we will look at some of the things that I want to look at, and then also yeah, there we go. There we go. Yeah, that's the people talking real assets right now. And then hopefully we should have plenty of time to check out some charts for any of you guys that want to check something out. Maybe you have your eye on a chart. I'm sure everybody just will want to talk about Hood, you know, but not much to say about Hood really. But with that, we will get going. So again, welcome everybody. Happy to have you here. First thing we're going to start with, I think you should always start with it. SPY, you should always start on the daily, on a Sunday or a Monday morning, as I normally do. And check out where SPY is trading. Look at what we think it could do. Kind of try to build a plan for ourselves for the coming week. So obviously on Friday, you know, ended up ultimately taking that nice big bounce off of the 20 SMA. Still to no denying market in a nice uptrend. You know, have all SMAs pointed up into the right, all SMAs stacked in the way you want to see them. You know, 50 EMA back well above the 200. So we know market is trending up without a doubt. However, in my opinion, we're losing steam right here. You know, of course, you don't expect just parabolic things like this, you know, run 30% or whatever it is off of those lows. Of course, you don't expect it to just stay parabolic like that. But if we really look at the last couple weeks right here, not a lot going on, you know. We've had, you know, a couple failed breakouts. We've had a couple failed breakdowns, depending how you look at it. Ultimately, we did close outside of this little range, even with that ugly sell-off on Friday. Big buying has come back, you know. And so I think the best thing we can do is always just check out a couple little levels, get some levels on the chart, figure out where we're trading, figure out what your plan might want to be for the week, and figure out areas of interest. One of the big struggles that I see people have all the time is that they just don't have a plan. You know, they jump in voice chat with me or Nando or whoever it is and say, you know, oh, you know, the SPY calls right here, you know, SPY puts right here. I'm never going to be able to give you a good answer. Something that I've really been trying to push people to do is don't just tag me and say, what do you think of, you know, Meta or whatever it is. Tag me and say, this is what I think, you know, this is what I think on Meta. What do you think on Meta? And so I've been getting more and more DMs of charts or even tags on Trade4 with actual trade ideas. And so to me, that's what you should be doing every single morning before you start trading. Figure out where on the chart you actually want to trade. And if you know, if you sit and you patiently wait for those spots to come, then you will start finding yourself having a lot more success. So this is always what I'm going to do. Obviously, you know, I have my chart that I'm trading. This is almost always what I'm going to do as far as charting. I'm going to look at some of the major levels, and then anytime we're trading at all-time highs, I'm more often than not going to run some sort of either fib retrace or fib extension, or as I'm doing right now, uh, I want to see where I expect pullbacks, where I expect breakouts, and how can I trade around those areas. So all that I did here, pretty simple chart, obviously. We marked some of these bounce points, marked some of the recent highs and lows, previous all-time highs. Obviously, we've set some new ones. And then a simple fib extension to the upside, just off this recent, swing low to swing high. You could do them off of any of these ones if you choose, but I am not a big user. I can't say I'm not a big believer, but I'm not a big, user of fibs on short time frames. Anytime I'm going to use a fib, I want to include as much data in there as I can. So obviously all I did here, as I said, swing low to swing high. So we have our fib extension off of our swing low to swing high, giving us some upside targets. We also have our fib extension on the swing low, or fib retrace on the swing low to swing high, just to kind of give us some downside targets, places where we might want to consider being buyers. You'll notice when almost always when there's a big breakout in the market or big breakdown in the market, it's followed by consolidation. So more often than not, if you're running, at least in my opinion, if you're running fib retraces correctly, your 50% retraces are very oftentimes going to be the bottom of those consolidation zones. 50% retrace is often a great place to try to take a stab for a bounce. And so as we keep building upwards, these are our downside targets where we want to, consider being dip buyers. Is there space every single day, in the market for scalps upside and downside? Absolutely. I always just like to get my head big picture around where we are. So if we're pushing up into these highs or whatever it is, I can, stop being long, maybe start building a small short position, and a scalp can end up turning into a nice trade, technical rejection to the downside. So for me, this is really what I have going on SPY right here. Pretty cut and dry. We really do want to be dip buyers around the 646, 647 zone. And 650 is going to be our big major psychological area to watch. If we get over there, you can see, not only is it a major technical level, it's a major psychological level. If we get over there, we can start targeting some of these higher, fibs that we have laid out here. Again, if we break down, we can start targeting some of these, previous day lows, things like that, SMAs. If we get down to the bottom of the range, again, we know we want to be dip buyers. So just get your bearings on where the markets are. And then the only final thing that I personally really had my eyes on, worked, really nice on Friday. Who knows how it'll work today, but we had a nice little wedge top setting up here on the back of some bad data. That sell on Friday, technically and fundamentally made sense to me. Obviously, it has not changed the overall trajectory of the market. Still a dip buyer's market. The bears have called 50 of the last 0 tops, as it tends to go. So still a dip buyer's market, but we can just find some reasonable places to be short. Does lead me to one of the other things that I wanted to talk about. Another absolutely data-filled week. I mentioned this in our class last Thursday, Friday, that, hey, probably made sense to go into this week hedged, just because, after that Thursday class, big data on last Friday. We have big data this week. We have job stuff. We got CPIs, we got PPIs, core inflation stuff that the Fed does care about. And then obviously we're getting inflation data on the back of bad jobs data leading into the FOMC meeting. I believe it's next week, the Wednesday, Thursday of next week, where, the Fed will make a decision on, rate hike, rate pause, or rate cut. So I think that this is a time in the market where, as I was mentioning it, we haven't really made it anywhere. Not to say that these big old $20 moves haven't been super sweet, super fun to trade, a lot of money to be made. But big picture, we haven't really moved anywhere for the last 3 weeks. I think that is, likely the market just setting up for the continuing data that we have, and to see that decision out of the Fed. We got most of the big earnings out of the way at this point. So it really does just come down to what the Fed says. million opinions out there of what's going to happen. We'll see. All we can do is trade the charts when they start presenting us the data. Once the data is out there and the market has made its decisions, that's when we can try to hop on the coattails and, maybe catch a move up, down, whatever it might be. But so with SPY, again, just to reiterate, I'm a big dip buyer. If we find ourselves down here in this, 633, 630 zone, 50 SMA, dip buyer at 635, bounce, looking for bounces at 646, looking for bounces at 640. These are all the places I feel comfortable looking to short the dips. As we push up, if we start pushing up into these trends, 650, I'm not going to be long. 653 area, this trend, I'm personally not going to be long. If we get the breakout, maybe I'll try to catch a little bit of the breakout, but I definitely will look for some sort of pullback just leading into that meeting, unless we get absolutely like stellar, insane, off the charts inflation is just cratering. Well, I'm not sure if the market would actually believe that data or not, but unless we get some truly insane inflation read, I don't expect any gigantic moves up or gigantic moves down, barring a huge blowout in one direction or the other. So, in my opinion, continue looking for overall range bound trading. That's what we've been seeing on the S&P so far for the last, few weeks. So continue to look for that range bound trading, and let's let some inflation data get out of the way, get this FOMC meeting out of the way, and then we should have a little bit more direction in the market as, again, we wait for some additional data to come out. Final thing that I did want to say, about the FOMC meeting. So there's certain FOMC meetings that are really important during the year. And this one just so happens to be one of those. So that's, again, just to add on, to add just a little bit, they release anything. It's called the SEP. We won't really get into that unless somebody cares. But it's a big one. This is bigger than your average FOMC. So that, again, kind of adds to my bias that I would expect some continued range bound trading / grind to the upside, barring any bad data. Still, remain dip buyers and all of that. But with that, that's what I got my eyes on for SPY. QQQ up next. Obviously, we'll yeah. I'm just happy they finally got their victory lap. Good for them. Yeah, congratulations to the hood holders. It is unfortunate that it's missed so many times that, don't get me wrong, $10 pop or whatever, $8 pop that it's given. It's rallied that much on speculation before. I was kind of expecting just an explosion, but seventh time's the charm. Good for them. So QQQ, similar setup to SPY, other than failing to set new highs. That's something that's why I wanted to touch on both of these. Generally speaking, these charts are going to be relatively similar. They are still relatively similar. We just have a slightly different setup trend-wise going on with these. And so again, we're just going to do the exact same thing we did on SPY, identify some of our major lows, some of our major highs around where we're trading, where we might have interest in, putting on a trade maybe, or not putting on a trade. And then again, I do the exact same thing. Like I said, when I'm looking at these daily timeframes and we're at these all-time highs, I'm always just going to pull a couple of fibs just to see what they tell me. I'm not a big fib trader in any form at all. They are just a very effective way to find levels when you're trading at all-time highs. So obviously, range bound, again, not going a whole lot of anywhere, not saying $20 moves aren't sick and there's a bunch of money to be made within $20 ranges, but we're kind of in, a slightly weaker range than SPY. As we saw with SPY, our trend was heading, up and to the right because it was setting new highs. Well, the Q's not setting new highs yet. So this is a slightly different setup for me. Any of these pushes up to this 583 zone, even some pokes all the way up to 585, I'm not long. If anything, I'm going to be looking short up at this area, big double top on the daily. There's no reason to look, as I said, all of the same reasons I'm not looking for big breakouts or big breakdowns on SPY, barring crazy data, anything can happen. I'm not looking for big breakouts or big breakdowns on QQQ either until we get that FOMC meeting out of the way. And to be entirely honest, the FOMC meeting might not even be know, it might not even be enough to really explode or really dump the market. You know, what we just, it's, as the Fed is, we are in a wait and see situation as well. What I want to point out on QQQ, I haven't actually checked the Q's futures. I guess maybe I could, I mean, that doesn't matter till the morning anyway. I'll rip her off the close. So on QQQ, the difference with SPY is we kind of closed right at a spot where I do feel like I would like to be a dip buyer. This 570, you know, I'll bring us all the way down here. This 574, 575 area retested this daily trend breakout. We haven't quite beat the statistics yet of 80% of breakouts fail. You know, this is third test. Kind of failed it, but ultimately bought back over it. I wouldn't hate one more little breakdown to give us a more sustained breakout. But I would still feel comfortable down in this 574 region. As I said, you know, 574, 575 daily trend area. Likely this 20 SMA will be lining up somewhere around there as well. I start to feel a bit more comfortable being a dip buyer there with relatively tight stops. We break below, we can look for some of these retest lowers, 572s, 570s, 567, 50 area, still remaining in more of a dip buy mode. And so, you know, I feel comfortable with the dip buy, but I will be tight with my stops. That's the biggest deal for me is if we are, you know, I'll buy the break and retest of this trend. If it is going to fail, I'm not going to hold these, you know, for a couple of few buck move against me, maybe add down here. I would much rather exit this trade and then take the stop out and look for a better entry because I don't want to have to ride this all the way down and then count on a trend break back to the upside just to be break even. Just not very good trading. It will be better to just cut your losses and move on from that. But nice little setup on the Qs. Honestly, a setup that I would prefer to trade more than SPY myself. So any questions there? Let's see. Oh yeah, Crash, I got UPS on the list. We'll see if we get to it. Yeah, exactly, Rob. So people are. I mean, I wouldn't call it exhaustion. I would just call it, you know, uncertainty. Oh yeah, as Fartcoin says, uncertainty. We have no answers. So everybody's worried about that. TSM, yeah, remind me, we could check that out. Yep, daily, I see. It was already answered. QQQ is a 578. Nice. Oh yeah, I mean, I guess I could have just checked the keys. Yeah. Awesome. We'll see where it opens. You know, that's a ripper though. That's a nice little few buck gap up right there. I like it. Bounce the trend real nice. But we'll see. You know, well, going into tomorrow, that's all we can do. You know, all we can do is chart these things. Maybe our trades are there, maybe they aren't there tomorrow. So if there's no questions, next one I want to talk is Apple. Everybody knows, I mean, at least anybody that comes to my classes knows that I have been beating the drum on Apple for the, I don't know, probably 3 months now, telling people to long this thing, get long, stay long on it. So far, it's worked out really well for us. I was even, you know, I'm happy enough to even say I actually caught some of the move. Rarely do I hold for much of the move, but I was able to catch a nice little move on Apple recently. So happy about that. Sticking with the long and strong thesis, without a doubt. However, much less aggressive about getting long now. This is not where I feel comfortable chasing Apple. When we were back here, any of these breaks under 200, I was a buyer. Any of these breaks over 200, I was a buyer. Retesting 200, I'm a buyer. I mean, even these dips this whole couple of weeks, you know, we bought it multiple times off this 208.50, 209 zone, making money, you know. I was, you know, I was very bullish on Apple. I do think with some of this antitrust news going on, we're starting to, you know, get some better tailwinds for this thing. You know, we're getting some of the black cloud out of the way. They're starting to make better partnerships on AI stuff. I know that was one of everybody's big concerns is they're falling behind on AI. I mean, sure, I guess that's an issue if you ignore the fact they're selling more phones, more iPads, more computers, like they're making money hand over fist. You have to remain bullish on Apple. However, as I said, getting to be less and less just, you know, bull buy all dips. Now I'm starting to want some deeper pullbacks to buy if I'm going to be, you know, getting in here. And so that was actually what I did on Apple this, you know, last week was this little gap, swung into these highs right here. Obviously missed this pop, but had our nice pullback to the zone where we knew we wanted to be getting long. Previously, I didn't do many levels on here. Previously, these were all of our big levels. Just from whenever this was, I don't know, back in October of last year. We know strong support all down here, well above SMAs, well above all of that. So we know that we wanted to be dip buyers down here. And so I was lucky enough to be a dip buyer, catch a nice little swing on that thing. Not as nice as it could have been, of course, if about the second dip, but still really nice setup. I will remain bullish on Apple. Only little minor trend right here, more major trend, obviously right here. So few places that I am interested in being a dip buyer. Obviously, right off this trend, this is not going to be for any sort of swing trade or anything like that. I'm going to be looking for trend bounces, pulls down, 280, 238.50, 239 zone tomorrow. That's likely where I would first try to be a dip buyer. Tight stops on a trade like that. Where I become more interested in a swing trade on it is pulls back to this gap high. You know, we obviously have the unfilled gap right here. Pulls back to this gap high or these previous highs, you know, not all-time highs, but previous highs here, 234.50, 235.30 zone. This is where I am a dip buyer. Yes, it's a trend break. Yes, it's all of that. The dip buy here, the risk reward greatly favors the longs to the shorts. If we start breaking back down into this gap, obviously I'd look for these highs that fall within the gap, your 233.50s, but below there, we'll likely get back down to that 231 and the 20 SMA. So to me, this is where I might have interest in the long swing trade on Apple. As long as we're holding this into lunchtime and today, that's probably where I'd be looking to be a dip buyer on it. Otherwise, perfectly comfortable buying the dip once that gap is filled. Look for that nice continued move upside. If you're into shorter term trades, scalps, things like that, trend breaks down to this 238, definitely money, even breaks under that 237, 237.50 zone. Probably catch a nice short real quick down to that 235. Not a lot of data going on right here, so we can probably see some nice moves. Obviously, if we zoom out, we know big support more than anything is under us. Our next major resistances aren't up here till these previous highs, you know, your 250s, your 244 areas. So we know that being in the dip buy mindset is a much better idea than being in a short the rip mindset on Apple, at least for now. So again, if I'm trying to put on a swing trade, I'm likely going to be trying to buy 234. If it's me, and we start breaking into the gap and we're selling, I'm very likely scalping short because I'll be having, you know, month out contracts, you know, some slightly out of the money month out contracts if I'm swinging long half position that I feel perfectly comfortable adding to on this 20 SMA down here. As long as I'm able to get some scalp short on it, I'd feel perfectly comfortable holding down to there. Wider stop than I would normally like to use, but a reasonable enough area to just scalp short and stick with your long thesis on a name that I think, you know, is strong and definitely has some room upside into the, you know, final quarter of the year. So any questions there? Let's see. I got Kiki if I said any upside on. For Apple, if I'm getting this dip down to here, I'm very likely going to be swinging 240s. If I'm down there to the 235, I'll be looking at those 240s for a swing to the upside.
Hey, River.
It's happening.
So, in terms of planning, like 1K, you know, he has like a spreadsheet he puts out and stuff like that. Do you write down your plan anymore, or are you just so good that you can just kind of know what your plan is?
Well, so I will say, generally speaking, when I start trading Monday morning, I hop on charts for 20 minutes before I'm on VC or so, 15 minutes, whatever it is. And my charts are already, you know, they're already charted. I already have all of this stuff on those charts. So I glance at them and I get my bearings of where we are. Every single morning, I look at the daily charts. So I don't I don't necessarily, I'm not writing down my plans, but I'm looking where we are in the morning. You get that information of where are we actually going to open up. You know, it's like QQQ is at 578 right now. It could be at 574 by open, or it could be at 580 by open. So I just have to get on there a little bit before market open and see where markets are trading. As I said, you know, because all of my charts are already charted, I'm able to kind of cruise through the 10 things that I watch and figure out where we are and figure out how I want to trade. You know, like if everything's at resistance, I'm not piloting long at the open, that kind of thing. But if everything's at support, maybe I'll be looking for early weakness and buy those first dips, you know? So I do it the morning before. Don't write down my plan because I am a day trader. You know, most of my trading is day trading and scalping. So the here and now is what matters to me. Of course, I swing trade something basically every single day. I have some sort of swing trade writing. But because I'm mostly a scalper and a day trader, you know, I don't care what happens at night. I don't care about any of that. I'm not taking trades home with me, really. So I just need to see what's happening in the morning, get my bearings of where the market is, and then start trading it. Or don't trade it, you know, whatever it's telling me. Okay, so next one, Amazon. I mean, see, so here's my Amazon chart. So you can see what I'm looking at already. We're gonna make a new one, of course. Exactly. Yeah, because I mean that one's the easiest plan ever. Click buy and you're good to go. So Amazon obviously super strong. I mean, this thing's just been a beast lately. Getting all kinds of just sweet buying going on. Basically, every time you look at it, there's like giant green rippers. Obviously, had some dumps down with market weakness, but as a whole, this thing's just kind of a beast. Obviously, rejected exactly where you should expect it to reject. You know, that daily double top. Very rarely are those things going to break on try number one. So, what I am personally watching right here is daily trend. Nice pullback to this daily trend. Nice little supports right below us with not only these previous candles. It's not something I necessarily put on my chart. I guess we will for example's sake tonight, but we start seeing a nice little pullback into this trend, into this 231.50. I'm a buyer on Amazon. Again, not quite as many tests as I might like on this, but I'm going to be a dip buyer on this with an extremely tight stop. Because the next thing that I have to point out, this is a setup I'm really liking in the market. So we buy our dip down here, you know, 231.50, whatever it might be, right at this trend. Great. If we're wrong, we're stopping out and we're looking for this gap fill. If we get back below this trend, if we get back below this previous low, or 230.7, we have a very nice low risk, high reward trade right here. You know, the stops will be the exact inverse of our dip buy. The entry will virtually be the exact inverse of our dip buy. Shorts around the 230 to 231 or 230.80 to 231 area with stops over 231.50. Very tight stop on a breakdown retest. And ultimately, look for this move down to the SMA. It's going to bump up a little bit, but you know, 228 slash the lower end of this gap fill could provide a really nice little pullback if we are seeing market weakness. So I love a setup like this. I will try to buy the dip. My preferred setup on something like this is I would have loved to call the bluff on this, short the double top. My eyes were just elsewhere on Friday. And, you know, as we saw a lot of, you know, the craziness happened in the first hour and a half of the day, and then nothing happened for the last couple hours of the day. So it was a beautiful short setup, calling the fake, you know, call the fake out on the first breakout and get the move back down. Now they've brought us to a place where I like it. Long or short, I don't, you know, as I said, I'm a day trader, scalper. So I don't care what the market's doing overall or anything like that. I care what can I trade right now. And when I have a setup that is very tight stop loss up or down, these are my favorite setups on the market. I like setups that force you to kill your bias. You know, I'm sure everybody is looking for the break and retest on this trend on Amazon right now. I'm sure the charts are all over Twitter, everything like that. I'm substantially less confident in the break and retest. I'll say it right, or, you know, break, retest, and run. I'll say it right now. Maybe I'm wrong. Maybe I'm right. But the breakdown, I could see Amazon giving us a nice little pull down. Obviously, under here, your first target's got to be that 230, but we get under 230 and you should see some relatively quick selling to the lower end of that gap fill. So simple one on Amazon. I guess I should put my other level right here. Uh, just so we can call it out a little bit better. 230.78 to 231.50 is our dip by zone. We break below the trend and push back up into it. 230.78 to 231.50 is our short zone. It's the exact same little zone. We don't care up or down, but we'll try to buy the dip for the bounce. If we're wrong, we'll stop out and we'll look for the first bounce to short. If we get a nice little downtrend going under it, we'll look for the first trend to short. So love that one. Really good setup there. I'm going to cruise through a couple here. AT&T setup I like. I've been preaching this one for months now. When we finally got this nice sell on earnings, my response was, I believe this is the thing that's finally going to give us that breakout over 30. We're getting real close. We had this 3-push wedge. Rejected right about where you would think it should, but we got the nice uptrend going right here. So very simple levels on AT&T right now. Not long up here. Obviously big psychological, this is a level, but you have to go back to about 2016 for the last time we traded 30. So big area on AT&T, obviously nice uptrend, setting some higher lows for us still. I'm a dip buyer down into this 29-20 zone for sure. Not getting long up here, might miss a breakout, but I would expect a failed breakout. And again, anywhere pull back to this trend down to this 29-30 zone, that's where I want to be a dip buyer on AT&T. If I'm trading this and I'm trying to trade it for the swing trade, gonna have to be a little bit more liberal with your stops. Really about this 28.50 is where your stop will have to be. But we also know, if I put a couple more levels on here, we also know where the market might want to bounce. So if you are swinging long on this, obviously it's AT&T. Don't go trading your 30s or your 32s. You're getting long at 29, swing some 29 calls. So if the pullback does come, you want to stick with it, looking for the bounce off these previous supports. You can add to it and still be in a reasonable strike. You don't ever want to be in those, $1.50, $2 out of the money strikes on something like AT&T. Does not move fast enough. But you get this move from 29 back up to 30, gonna put you in a really nice place where if this push up does come that I want to come, you'll be positioned real nice, very reasonable strike, deep in the money, ready to really capitalize on that run.
Quick question, River. Sorry to be.
Love it.
It's probably a silly question. So on that third push on that wedge for AT&T,
Yeah.
you say if it's got a failed breakout, okay, I'll just wait for the pullback. Like as a new person trading, my immediate thought is FOMO. I got to get on this breakout.
Yeah,
But
you're gonna lose.
yeah. So is this something you've learned over time? Is it just a try it and test it?
It is a real statistic. So 80% of breakouts fail. And that's not me, that's not me making these numbers up. That's none of that. This is a person went through 130 years of market data and found out that 80% of breakouts fail. So that's why you guys will oftentimes hear me on trends. If we, here's the start of our trend, here's our second test, here's our third test, I'll short this for sure. Statistically, this is not going to be the breakout. Statistically, this one's not going to be the breakout. And obviously that's where it starts. So I'll short this. I'll short this. Well, when we hit our fourth one, we got our first, we got our second, we got our third. When we hit our fourth one, I start to be cautious. I might short it, but I'm going to short it with a really tight stop. If I'm shorting a second or third test on a trend, I'm going to be a little wider with my stop because I personally expect it to fail. It's why, we have, people who try to trade breakouts in here. The issue with being a breakout trader is people often lack the patience to really be a breakout trader. So we know 80% of breakouts fail. So if you call yourself a breakout trader, that means you are trading an idea in trading that fails 80% of the time. So you have to be very cautious and you have to be very patient waiting for those things. That's why, in VC with me, I'll oftentimes feel very comfortable shorting at highs and oftentimes very comfortable buying at lows because it's not just breakouts up. It is also breakouts, breakdowns. They fail more than they work.
And I know you say that all the time, and I agree with you. I guess my question is behind that psychology. Like there was a time where, man, I would just short every, top. And then there was a period where I was doing that, and man, everything was just going against me. And I got in this rut where I didn't care. I just wanted to be a breakout trader. So
Yep.
I guess that just comes with time. I know that
Yep.
it's a
And you should, like, the thing with breakouts are, there's proper ways to trade them, but it's all about where you buy. It is fine to be a breakout trader. However, if you're buying at these blue, even I mean, if you're buying this, if you're buying this circle, if you're buying this circle, if you're buying this circle, you aren't a breakout trader. You are a chaser. And that's just not good trading.
You,
Chasing
you
those
base.
moves
Go ahead. Go
fails
ahead.
chasing those moves fails so often that you aren't a breakout trader. A breakout trader lets a move happen, lets consolidation occur, buys the lows so that when the breakout comes, they have best possible entry. That's like AT&T. Gave this wick. I didn't catch it, obviously, but and I think originally even I think if we went to my chart, my trend's actually like this. So because this hadn't happened yet. So when this wick happened, I missed the buy up, unfortunately, but think of the breakdown. It broke down. I mean, this was a hideous candle for a second. It was absolutely clobbered, giving up trend, giving up daily level. Breakdown traders got wrecked. I would have hammered this thing long had I been paying attention on the charts at that time, because this is this, third test of the trend. I'll buy that every single time. I'm not going to be necessarily looking for the breakout. However, when I buy here, then I get the best possible entry for up here for if the breakout does come. As we can see, so far it failed. However, anybody who chased the breakout up here, 2950 or whatever it was, they're nice and red. I'm up, I'm not in there, but theoretically, I'm up 100%. I don't care about these little pullbacks. None of this matters to me. I'm a buck in the money, up 100%, not caring what the market does. I'll have my stops, but I'm still going to, look for pullbacks and buy dips when they come, because it's so much more effective. One of the big double tops that, I mean, everybody in OOT ignored for some reason was this Rocket Lab one. I mean, this was not a good entry. I know this is unfortunately where you guys went. This was a prime example of chasing the breakout. You're buying a big old daily double top. Ultimately, you got the pop up to a perfect double top. First test of it. There's no reason to stick long on this name. In fact, you should be short on this name. This is it was a perfect entry short. So that's just a great example of a trade that I saw in the group recently. That was a very, very obvious short trade. So always assume the breakout won't fail. However, sometimes you'll have things like Apple, okay? Where you have this nice range down here, and this thing was set, whatever it was back here. So you know where you want to be the dip buyer. You know where you want to be the dip buyer. Well, look at our tests. Here's our first test, our second test, our third, our fourth, fifth, sixth, seventh, eighth test. None of these work. When the breakout comes, it explodes, and that's the important thing about being a real breakout trader. If you aren't letting some amount of consolidation occur, you're just chasing a move. You aren't trading a breakout, because you can't have a breakout without consolidation. So if you're just buying Apple calls every day because it's going up, I mean, good job, because I've been super bullish too, but it's not really good trading. You want to be buying at lows, looking for moves back to highs. If you keep chasing all these candles, you can see we saw it with Apple. People would chase the move and it'd stop them out, because they go way against them because they got long at highs. They'd do it again. They chase the highs. Oh, it's breaking out today. Sell them right back and stop them out, because you're chasing the move. You aren't actually trading the breakout. Okay, so next one we're gonna talk. I know a lot of people trade this one. SoFi. This is one, funny enough, trade that I'm looking for to break out. As you guys know, I don't, I'm sure a lot of people are saying like bull flag or whatever. I don't personally trade bull flags. I trade consolidations and breakouts. So there is no denying we have a nice little trend right here, pushed right up into it, rejected exactly where we think it should. We have very obvious previous highs back here, our 2470 to 25 level. We have our range low right down here, 2420-ish, we'll call it, and highs up here, 2665. This is where I want to be long, SoFi. Get our dips down here to this 24-25 zone. This is where we want to be buyers with tight stops below it. Obviously, we get under there, there's a good chance we can push down to some of these old highs, you know. If we get under there, we can obviously see some selling. It'll definitely be a failed breakout. However, this is where I want to be a dip buyer. 24 to 27. Definitely a place where I want to be. Is this all-time highs? I thought SoFi did crazy stuff way back in the day. Maybe I'm wrong.
I think it's like 28 or something.
Yeah, 28. Pushing into those highs, obviously that's going to be your major target above here. But ridiculously strong uptrend on this thing. They've been buying it nonstop. It is finally dealing with some of its debt issues. It's put up some decent earnings. Found itself a little bit more profitable. Can't really say profitable, but doing better than it was. So I want to be a dip buyer down here because, as you guys know, and it's going to be in this next chart as well. I've been bullish on financials. I've been preaching buy financials. Well, January, February, March, I was preaching it. April, May, I was not. Well, end of March into April, I was not preaching it. When I was saying I felt like the market had set a bottom, that middle end of April, I started, preaching buy financials again. Very, very easy sector to stay long on. Of course, we have some, housing stuff, debt issues, things like that could, rear their heads eventually. But regardless, banks are making money. They're making mortgage money. They do well in high rate environments. They do well in low rate environments. They make money no matter what. So easy sector to stay bullish on. SoFi falls in there. I know it's a more unique one, but I want to be dip buyer on it. And then again, as we saw, looking for dip buys down in our 24 to 25. First target is going to be the trend. It's not necessarily going to be above the trend. We have got our, 1, 2, 3-ish tests on it. Maybe 4th time's the charm, maybe 5th time's the charm. But this has consolidated and rejected the trends enough time that now I do start to have interest in it for a pullback to buy, to look for a breakout to continued upside. Obviously, your 28, 30s, whatever it was, all-time highs. And then likely that 30 big psychological number. I think it's got it in the cards sooner than later, but we'll see. But nice little setup on SoFi. Obvious place to be getting long. You're, like I said, 24.70 or 24 to 25 zone. So you got about $1 risk there. And ultimately, you're looking for $3-4 to the upside. So really nice risk reward. Of course, you can trade SoFi with weeklies, but it's something that it's cheap. You can get those month out contracts. Really, I would stick to the monthly contracts. Best volume, best OI. Can have just the most interest in them. And while you should never take a trade based on monthly OIs or volumes or anything like that, that's gonna hurt you in the long run. You will at least see where people have their money parked. I haven't actually looked at the options on this or anything like that, but you'll see where people have their money parked, and it can give you a rough idea of where people much richer than us think that the market is going to go. So it can be a nice, powerful little tool to look at those kinds of things. Oh yeah, Rob, and 80% of breakouts fail, and a disproportionately high amount of first breakouts fail. That's why I oftentimes very, very, very comfortable buying or shorting or going against the market on a first breakout, because it doesn't stick often. You might be able to catch a little volatility upside, but most of the time they're going to sell that thing back down. And so I will almost always short against it, or long the fake breakdown or whatever it might be. And so final one for me, as I kind of hinted at, as you can imagine, XLF. So this is one we're just going to stick with my charts, same ideas, same all of that I've been doing. If anybody was in my class on Thursday, I was mentioning, hey, we got some pretty dang important data coming up, and you likely don't want to be long financials. I'm looking for a pullback in financials. And so I wanted the pullback to 52.60. That's, this 52.64. There was, I think that's what I said. You go list in my class to hear what I was looking for. There was very, very little chance I thought it was coming in one day. I mean, the last thing that I expected was for, XLF to be down 2 or 2.5% or whatever, with 2% at the worst, something like that. Did not expect that. Pullback came. I've now bought this. It was a last minute decision on Friday. Figured I wanted to hop in there long. Ugly candle. It is, first or, second, third, fourth, could be the breakdown. Could be the big failure of the double top. Might be catching a falling knife that might want to dip a little bit lower on me. But got some time in here. It's a sector that I definitely feel super safe with swinging on this one. I guess I haven't even checked it in the after hours. Oh, Oh, well, that's a fakie. But nice little setup to me. Worst case scenario, I'm stopping under this 52.30. So I got, I don't know, 60, 70 cents of risk, not huge risk on this trade at all. If we break under there, I'll definitely would expect some selling. But in all reality, I'd feel perfectly comfortable adding to this position right down here if we do continue to go down. Super high risk to be in any, longer term swings right now with CPI, PPI, FOMC, jobless claims, all this data going around. But you show me a knife like this the day after I said I want the pullback on XLF and the financials to actually get in there for a long swing, and that's what I did. I should obviously have these on here. So that's what I did. My dip buy was, I don't remember what I got in there at, somewhere right around 53. I let a little bit of a bounce happen, but somewhere right around 53, and figured it was worth it. And then two comfortable places to add. It's 50 SMA. I might add a little another quarter position, and then 52.30, add another quarter position, find myself in the whole position. And then again, looking for not the breakout yet, 53.50 zone. And then, wherever this trend ends up falling by the if and when we get back up there, that'll be really the main target, looking for the bounce. So I got, 70 cents of risk for about $1.40 to the upside. And I'm perfectly comfortable with that in a sector that I feel, can continue to perform well going into the end of the year. So with that, that's all I got. 9 minutes, 10 minutes left. Anybody got any trade ideas? Anything that they're checking out? Yeah, the
Did you-
Starbucks trade. I mean, shit.
Sorry.
It was on. This was, in my opinion, it was me. I probably would have added right there. On Friday or whatever that was. To me, this was really that spot to be looking to add right here, or enter the trade if you weren't in the trade yet. There's no denying downtrend is occurring here. Obviously, here's our downtrend, but we're getting
That 200 SMA just said nope multiple times.
But we're getting tight into the end of this thing. And so that's what I think. I think it's a nice little range bounce play. I think it's perfect. We've seen, we got a nice triple bottom setup. We even had to try to poke below it and buy back up, So I love this setup. I think it's a great setup for a long trade, especially if you were getting in it on, Friday, or Thursday or whatever this
What
Friday.
sector is that? Sorry.
Starbucks. Definitely love it for the dip buy right around here. And then for me, I would still honestly probably comfortably hold down to about this 83.27. And that's about where I would start to, look for my stop out if I was taking the entry around 85.50. So $1.50 down. And then what best case scenario, I'd be looking for this trend for a nice $3 up, nice one risk, two reward trade. Beautiful little trade here. Beautiful setup. Nice consolidation, holding the levels you need it to be holding. Or we'll see how a couple more days go, but holding where you want it to hold, getting ready for the push upside. I think it's a great little setup. Yeah, asking shark can always be a good one. CCCC? I don't know what this is. Oh. Yeah, I mean, I don't know anything about this. I would hate to give you any advice on something like this. You got a penny stock that's up just what, 100 and almost 200% off of the lows. I guess they do something. No clue what they do. Never even heard of it. Reclaim the SMAs. I think I was trading $7. Shoot, I mean, look at that. It set you the all-time double bottom. That was really your buy. It was down there at 100 was your no risk buy. Or sorry, $1, not 100. A little ugly here. Take that nice rejection out that wedge there. That's probably what I would have been looking for. I mean, you got SMAs, crossing over SMAs. Like I said, I have no idea what this
You
thing
probably
is.
can't even trade options in that, so you'd have to
No,
be
I highly
shorting
doubt
it.
that's options.
Yeah.
I highly doubt it's
Yeah.
options, but
Can't really trade downside on those unless you have shorting. Oh, you're allowed to short.
you can sell some share short on it. C4 Therapeutics, I gotta believe it has a halfway decent short interest.
Don't you need like certain amount of collateral in your account though? Because I know on Schwab, like
A margin
they don't
account.
let me.
A
Okay,
margin
yeah,
account,
that's
they'll
why.
never let you do it.
I got a cash account, so they don't let me do it, which I don't really. I'm cool with that.
Yeah, that's fine. I need to be unlimited loss and unlimited
Yeah.
loss and limited upside is always unfortunate, and that's what
Yep.
that's what a short provides you. But I mean, God, I mean, looking at this, dips down into this trend. Those were what to buy. Somewhere down here, 240. Again, I have no idea what this penny stock is, so do not. I'm not recommending this trade in any way. But dips down in this trend and it's 250. You can try it out. I probably won't be joining you on that one because I don't know what it is. Nvidia swing, zero interest really. I mean, we did finally fill that, or fill this little double bottom up down here, which I liked. I don't, but they have, so I'm not bullish on, I'm of course long-term bullish on Nvidia. You can play this technical double bottom right here. That TSM news hurts them. So I think that, the breakout, if when it comes, it's Nvidia, the breakout on Nvidia is going to come when they take back those additional regulations they put on TSM and some of those China chips. I don't think the market's really liking that just yet. I think that you have to be a dip buyer always on Nvidia. 165 is not a bad place to do it. Definitely little to no interest short on Nvidia, that's for sure. But I personally wouldn't really want to touch it. And Lulu calls, no reason to trade it until that earnings is out of the way. Give it a couple more days. Like this to then I mean, that was a ripper off the open too. Yeah, to a 7.5% rip. The market has no clue what they want to do with this. So I'm not ready to be a dip buyer on it. Do I think that sell was likely a little excessive? Yes, but there's also no denying that, I mean, yeah, it was a big sell. It's also crushed. It was already over 50% off of highs. So stocks don't do this when things are going good. Is there, I'm sure, a technical trade if you went back a little further? Maybe there's not even a technical trade. Is there a technical trade here somewhere? I mean, sure. Yeah, I mean, kind of actually, yes, but let's go to this. What is that, COVID or something? Yeah, let's go to COVID lows. I mean, there's not a lot stopping it from down right now. I know everybody wants to buy that dip, but let's at least go tag 150, get a nice psych number down here and go from there. Oh, Lulu puts, yeah, just no puts on it. No puts, no calls, no nothing. Let that figure itself out, Aerotine International. I mean, we all know, dude, that your only regret will be not buying more.
If you were you and you emotionally bought a long call on Hood on Friday, what would you do first thing Monday morning?
It depends what it is. I mean, if it's a weekly, I'd cash it. And I'd buy the first dip, probably. But if it was a weekly, I'd cash it without a question. Because your IV is going to be juiced off the open, and then it's going to crater on you. So first, I'd be selling very first pop that showed up without a doubt. Adobe's still failing. Technically setting a higher low here. Very weak higher low. A lot of tests on this thing, a lot of grind down. In a weird way, kind of actually looking like almost appealing for the first time in quite a while. Who asked about this? I mean, I hate it. I'm not long here, at all. But give us one more pullback. Or somewhere, even down to this 340 psych number. One more pullback down to here. Get a better higher low set than, than 330 to 332. Get a better higher low set around here at this 340. You could look for that pop back up to, these highs, your 353s, and it might want to get over that trend.
Yeah, 100%. I'm gonna wait this week and see how it kind of plays out. I want to see a pullback.
Yeah. Great. Yeah. Great eye on that one. I mean, honestly, that's a nice setup. I mean, that's a beautiful setup. If you're going to be a dip buyer, that's one to be buying a dip on right now. I mean, I guess I should probably zoom out a little bit more. Oh yeah. You gotta be the dip buyer down here. I mean, yeah, you really gotta be. Wow. Yeah. Good eye there. I like that one. Next spot would be your 324.
That's UPS?
That's Adobe.
Okay.
ASTS though, I'm bullish on because my guy Crash is bullish on it. Oh yeah, look at that. Yeah, we should be dip buying right here. Remember when I said buy that first wick and buy some 42 weeklies? Did you see what those things did, Crash? I didn't buy them, but they went so insane. That was a sick one on Friday. I was so bummed I missed it.
Jesus, what kind of Sunday candle is that?
Dude,
Get that.
those things are downright common on that Sunday open. They're funny ones. TSM not, but TSM's one. I forgot. I'm happy you brought this up. So TSM's one, wildly obvious range right here. Bouncing because everybody's finally admitting that they just all TSM makes all their chips and has for years. I don't know how people didn't really know that, but people are kind of realizing. I will say, I would normally be super interested in short up here. And I still kind of am, but I want to push out. I want to go try 250 and I will short this thing. I think the China news for them is very bad. It's going to hurt their business in a big way. If Nvidia has them cutting the production of all of those chips, Nvidia is giving TSM money hand over fist, and so you have to be cautious on this thing. I know my buddy and I were just talking this and he sent me his chart and he had this trend right here. Gave the breakout, gave the retest. I can't deny it. I'm just not ready to be long on it. And I might end up being spectacularly wrong. I mean, I think you guys can see very obviously where I thought the dip I was already on my chart. I might be super wrong on this, but I'm just not, I don't think it's ready to break out at all. And I will not be surprised to see us back to some of these lows, our 225s, 230 areas sooner than later, personally. Let's see. Oh yeah, UPS. This one's insane. So I like this double bottom. My buddy's in there. He's the one who messaged me. He's the only reason I looked at this setup and have this setup marked out right here. I like this double bottom. I think the risk reward on it is just sort of a no-brainer to get long. However, the big disclaimer on this thing is so far for quite a while, things a value trap. It's like, look at this, it's not doing good. Really, the more you zoom out, it's terrible. The thing is throttled. We can look back to all of these supports, our 2019s, our 2018s, 2015 supports. Love that setup. Love a gigantic double bottom like that. I think of anywhere on the chart, and don't get me wrong, I have tried to catch this a couple times and been wrong. But anywhere on the chart, I like it here. Stops will be under 80. I'm likely going to be looking to get in a position on this one sooner than later. Don't love that it still has earnings coming, but I would hope that if I'm, getting long on this dip down here, my stops are under 80, that the market might want to give us at least a little push up into those earnings. We'll see what happens. Again, no denying the chart is hideous.
Why do you
But
think it's getting clobbered like that? You think maybe because just
they
as Amazon keeps
they
taking
just
over?
lost deals and
Uh,
shipping is dying, and yeah, I mean, and Amazon did use them or something and went and did their own thing, and so I mean, it's hard to be a shipper when you can just do it at the post office super easy too.
yeah.
I think it's mainly the Amazon loss of business.
That's what I would think, but I mean, I don't know. I don't follow it well enough to really make the judgment, but I do like it here. Where's the re-entry on gold? It was a couple of days ago when people were trying to swing short on it. I mean, I don't even know. It was down here. Now it's probably right here.
Oh, dude,
Where's
check out GFI. It's gold related.
Is it a miner? I just don't trade them. I don't like them. Trade gold. If you're gonna trade gold, trade GLD. Or trade GC if you're a futures trader. But if you're trading gold, trade GLD. Miners suck, I mean, they rarely isn't that the one I was thinking of?
GFI.
Yeah, but isn't there gold? Is gold just
Yeah,
gone?
gold. It's gone, dude. Yeah, I was
That's what
looking
I'm
for that
saying.
one too.
Don't touch a miner. Don't touch anything else. Trade gold. If you're gonna trade gold, trade gold. That's like I'm such a staunch believer in that. People have just been getting burned trying to take other gold trades for like 3 decades when they should have just bought gold for $30 an ounce or whatever it was in the 80s, $50 an ounce in the 80s, they'd be stoked, but trade gold, trade GLD if you're gonna do it, and stay long. Don't be the hero. Don't try to short this thing. This is a many month long consolidation breakout. backed fundamentally and technically. You know, trade gold. Focus on gold. Now that it's so expensive too, it's going to give you your nicest multiplier. It's out of the monies are cheap. They move really good. It's yeah, trade GLD.
I think I asked you about the gold one time too. I noticed it makes I feel like it moves bigger in between sessions, like
Oh
aftermarket.
yeah. Oh yeah, yeah. Trade
So
gold.
it's something you
100%.
have to swing,
It's yeah, it's
almost.
great. And you can get some wild spreads. I mean, it's the gappiest chart on the market. Look at this thing. It gaps, I mean, it gaps more days than it doesn't, you know?
I
Up
noticed that
and
I
down.
started looking at the
Yeah,
4 hour
but
because of that.
yep. TTD. I, like everybody else on a buy at 50, I have not pulled the trigger yet. This one made me mad. This I was shocked. I mean, this was like I was pretty shocked by this one. I thought that they were gonna blow out. And they got demolished, you know. I want to be a buyer like everybody else at 50. I should probably just be building into a position. Under 50, we're going back to these lows, you know, whatever it is, 47 down to 43, you know, we'll get back down to there. I think if you're a share buyer, you got to be nibbling it right here without a doubt. But don't be surprised if they do want to go set this. It'll be a big old, like, I mean, it'll be like a monthly, a weekly, a daily double bottom. I mean, it'll be money if they get us down there. That's where my real interest lies. But it's already, you know, I mean, I don't exactly remember. I don't remember what that earnings did, but it's down 42.4%. So looking for another 15 on top of it might not be the smartest move, but I'm just not quite ready yet.
Yeah, GFI is a gold miner. I'm gonna sell my shares.
I mean, dude,
I'm up on them. I'm
you
up
might
on
do
it.
fine, but they just will always dramatically underperform, you know? Like,
Right.
I mean, that's the issue with them is that like you can like look at
I
this.
grabbed some shares around 30 bucks,
Yeah.
I think.
And like
Somewhere
it
like
looks
that.
like they must have changed something. Maybe this was just big buying into Divvy, but like when you look big picture on the chart, thing was dead money for 2 years plus, you know? And so it's hard. I mean, gold, trade gold.
Yeah,
Coin
for sure.
puts. I think somebody's like swinging those, but like I don't know. I'm not short here. I think I saw it on like TrendSpider and shit too. Like I I'm a dip buyer. I'm a dip buyer right here. I don't know. Bottom of range, beautiful consolidation. Attempted the trend break, failed it as we expect. You know, we got our first, our second, our third, our fourth, our fifth. First attempt. Our first breakout often fails. I think you got to be a dip buyer down here, 292. I mean, if nothing else, the risk reward is like the risk reward where we're trading right now favors longs so much more than it favors shorts. It's ridiculous. So to me, I'm long here. I mean, I'm not long here, but I would be long in the 292 to 300 range. You know, you of course have to be cautious of the, you know, psychological 300, but now you got 300 lined up with the trend after a couple months of consolidation, things ready to move. I would personally lean upside, but who knows? Can you get in gold before FOMC? I mean, whew, risky, but that could be one that goes insane. Yes, sushi, you should have just held. I mean, how do you think me and Tilio feel, dude? At one point, me and last year, dude, me and Tilio were in like August 2025 gold 200 calls. We like bought leaps on it and did nothing about it. Somewhere back here, trying to catch this 200 breakout. Yeah, even more than that. Look at that. That was 20. Oh, so that was that. Yeah. So we were in these somewhere back here, or, you know, trying to catch the 200 breakout. Obviously didn't catch the 200 breakout. At expiration, I mean, those things would have been, you know, $100 plus in the money. Yeah. Oh, it hurts. Uh, just go at the buddy, or, you know, a couple bucks out of the money. I'm always going to recommend out of the money. Yeah, I know Wax and I just trade different. He likes to try to catch those breakouts or breakdowns. He doesn't he has less issue with chasing than I do. You know, when it works great. I'd get more time than that if you're going to be risking that FOMC, you know, because if you're risking the FOMC, those things could get wildly against you. So I would not just go for the week of FOMC calls. CoreWeave at a buy. You can see where my lines stop on my chart because I think they're right around here. This 80 to 85 zone is likely going to be your buy spot, at least in my opinion. At least in my opinion. And if nothing else, lowest risk reward is long. So you definitely want to be looking long on this more than you want to be looking short. However, we get below the 84.50. Let's look for some more crushing and let's get down here to our 65s, you know. But as it's set up right now, trying to build a base, nice consolidation for a couple weeks, I would be more of a dip buyer than a shorter here personally. Hams, I want to buy this dip on. I feel like I've kind of missed it. You can see I was asking MMA sometime last week. Um, and I'm bummed I didn't get in there. Oh yeah, MMA cleared trade floor, so that's gone. Last week I wanted to be getting in there. Same setup. You guys can see I look for the same things in the market always. This one was even better, sitting right at that 200 SMA. Big old triple bottom on the daily. This thing was the no-brainer buy back there at 40-42 zone. So I like it long term. I think they're going to do good. I think, eventually they're going to hurt a little bit just because like Ozempic and shit gets so much easier to buy. But they sell so many other products that I think long run, it's going to work out pretty good for them. Okay, and with that, thank you guys so much. I got to call it here. I'm going to go eat some dinner myself, but I appreciate y'all for being here. We have some great trades lined out. Like I said, Apple, Amazon, T, SoFi, XLF. Loved that Adobe. That one's a beautiful setup. UPS, higher risk, but great setup there. Hims, as I said, we're a little late for it, but I still like it more long term. Again, get me back down to these 40s, 42s. I'll be a buyer again. And so, yeah, good setups all over the market. Should be a fun one. Nice little turnout tonight. So big thank you to all of you, and we will catch you all tomorrow. Thank you.